The last 24 hours have seen a severe reversal for the stock markets and cryptocurrencies, but the king of them all, Bitcoin, has been holding up. After a quick flash crash down to 63.5, it's recovered relatively well. So why is everything down? And when is it going to recover? Is this the crash that the markets have been waiting for, or is it just another test until we see new all-time highs? That's what we're looking at in today's video, so make sure you hit that like button. Subscribe to the channel if you haven't already. This is your home of macro cycle analysis with me, Jason Pizzino, looking at Bitcoin, cryptos, the stock markets, and the real estate cycle. All right, guys, let's kick it off with a fantastic quote from Naval. If you want to make the wrong decision, ask everyone. Now, I know you're on YouTube looking for answers here, but I think it's important to at least begin the analysis with understanding that if we're trying to search for answers across everything, we're not going to find the right answer. Personally, I don't watch any other channels when it comes to understanding the markets. And I know that can seem counterintuitive because you're here on the channel. So if you find yourself in that situation, maybe use the information, go and research it for yourself, because as Naval says here, if you want to make the wrong decision, go and ask everyone. Unless you do the work for yourself, it is probably not going to work out in the long term. So hopefully I can give you something in today's video that you can use for your own benefit and you make it your own work in due course. With that said, let's take a look at some of the data here. Now, this is just the pure data from the markets given to us by Jeffrey. And using this as an example, what I do is use this, apply it to my own analysis, and then work on the results from there, adjusting my risk and whether I think it's a good time to get into the market or out of the market, and try to answer the questions that I gave you at the beginning of the video. You know, is this a good time? Are things going to get worse? Should we be expecting new all-time highs or major corrections? So in terms of the data here, just looking at the July market performance, something that we've covered before, but I think it's even more important to look at it now, as of course we've seen pretty significant corrections on the S&P 500, on the NASDAQ. Even Ethereum has been coming down pretty heavily over the last few days. July shows up as a correction or a peak and then a correction, basically to almost the same days that we have seen it so far. Now, of course, the month isn't over yet, and there's still some time to go, but you can see that there's typically a peak around that mid part of the month, 18th, and then you get this significant correction for about a week into roughly the dates that we're in now, and then the market grinds higher from that point. Now, that's looking at the dotted lines. The dotted lines are for election years, going back to 1950. So 70 years of just pure data, not someone else's opinion. It's just the data itself. In the solid lines, you can see that there is still a peak around the same time, but then they plateau. So that's basically the recent 21 years, every single year, not just the election years. And so they plateau, whereas the election years drop off and then start to climb back from that point. So it doesn't seem like anything is too out of the ordinary, but of course there is a lot of fear, as we can see from the fear and greed index on the S&P 500. Things have dropped into fear. The last couple of days have been in the neutral, basically fear to neutral, and it's back down to those same market sentiment readings as where it was in April when the S&P 500 was back down here. This is also an interesting piece of data, looking at these significant or severe corrections in a market. The S&P 500 cycled from 5% above its 50-day average to below average in only 6 sessions. So essentially what this is trying to record is a higher than average move and then a quick drop off. What does that mean over the long term? Similar reversals displayed excellent returns and consistency for the S&P 500 over the ensuing 6 months. So as you know from the channel, we're looking a little bit further out than the majority of people. Most people are focused on the day-to-day. You'll hear them talk about it, and I hear it all the time. Oh, the market didn't do so well today. And it's like, well, are you buying anything, or are you just looking at the news headlines with the market price action? And the majority of people really don't have any sort of plan. They just see the headlines. Oh, it was down 2%, and the day before it was down 2% again. And so they just lean into those headlines. It's like, well, what are you using it for? How are you putting it together? Are you actually making any money from this thing, or is it just sitting in some sort of retirement fund and you just want to talk about it like the latest soap opera? And that's typically what I've seen, at least over the course of my experience here. Most people just talk about it day to day. They don't have any sort of longer term plan. So when we put this data together over the longer term, you can see that each time this has occurred, there's been some pretty good bounces from those areas, and they've been pretty significant areas for buying opportunities. Now, this, of course, only goes over 12 months, but you know, if you are here on the channel, we're looking further than 12 months. Now, there's only 10 signals like this. However, it goes back to 1928, and that's a pretty good reference range there. We're looking back over nearly 100 years. The main thing we want to look at here is you can see the 6 months, perfect hit rate. The 12 months later, however, different story, 60%. But we're not using just one standalone piece of data. And we've looked at a couple of pieces already, and obviously we look at a lot of different things on the channel. Not to make the video go too long, we need to layer this on top of our technical analysis that we'll also look at later. So let's have a look at the summary on this. The S&P 500 is currently experiencing a correction characterized by a swift reversal from above its 50-day average to below in only a handful of trading days. So essentially seeing this climb up, a dump, and then potentially what happens from this is a V-shaped recovery. And so we've seen several almost V-shape and some significant V-shapes. The most recent one was the COVID correction. That was a beautiful case of a V-shaped recovery in the face of the most severe fear that we have seen probably in this entire cycle, going all the way back to the GFC. I don't think you could find another time in the market's recent history, say the last 20 odd years, that you saw such a severe correction and then a climb out of those lows. It seems like just another correction in the market, bringing up that fear. So far down 5% from the highs, and that previous correction in April was down 7%. Even the banking crisis of 2023, a non-crisis, it was absolute garbage put together by the media. Yeah, sure, some small banks went down and everyone was looking at banks that were losing money, but at the end of the day, the market boomed from that point. And even at that time, you only had a drawdown of 9.5% from the peak to that banking crisis low. Now, if you're not following the charts, you would have thought that the market was imploding and there was a recession. It didn't happen. I'm just looking purely at the charts and what happened in terms of price. Okay, so that's going to lead me over to a quick look at the interest rates. Next week is the meeting. 93% chance that the rates remain stable at 5.5%. And the following meeting, there's a much higher probability that there's going to be a cut. Let's wait and see how that all pans out over the coming weeks, because that's in September. And there would be more people thinking that we'd get the cut because the stock market has corrected at this point. Let's hold our horses and just see how things recover from there. Now, the NASDAQ also is seeing this correction. It's down 4.6% on the month, obviously being led by the tech stocks. And you can see significant falls here for Apple. You can see Microsoft, also significant falls here. But as you'll note from basically all of these stocks, they're still above their support levels, some pretty significant support levels, and those previous all-time high prices back from 2021 for the tech stocks. Nvidia still well and truly up there. If it is going to fall, you got plenty of support to the downside here, especially around $90. So it's not impossible. They could keep falling, but after the quick moves to the upside, well, there is going to be some sort of profit taking. How severe is it? At least from my analysis, I don't think it's going to be overly severe, meaning I don't think this is the end of the cycle and there are no new all-time high prices. So that's a recap of the stock markets with everything else coming down. S&P is down, NASDAQ is down, these tech stocks are also down. Let's cross over to BTC and cryptocurrencies. Now, the Fear and Greed Index is giving us a reading here of 68. I've just refreshed it. That's today. Yesterday was also 68, and it's basically been sitting around this greed going all the way back to a couple of weeks ago before we hit that neutral point. So 14th of July was the last time that it was actually fearful. Now, the Google Trends, so the search terms here, are starting to tick up for BTC. This in June, so 4 or 5 weeks ago, it was at 19. Then it got to 20, then 21, 22, 23, and this week is on par with 23. So the last 5 weeks have been this slow grind up. I do like to see those slow grinds up as opposed to these quick, fast moves. The quick, fast moves are usually met with peaks and then severe corrections. You can see it happen throughout this entire 5-year history. And then once you start to get some sort of slow grinds, maybe you get a peak, dies off again, another peak, another period of where it dies off. That's the interest, people coming in and out of the market. But eventually you start to put in some higher lows and the market grinds a bit higher until you get into these final peaky stages when everyone's trying to search for Bitcoin and they're all trying to get in a little too late. Bitcoin has had a good little bounce of $63,500 to the downside, the 50% level. Any sort of moves lower than 63 would take out these support levels that it's been putting in. It'll take out this 50% level of the entire correction range, so that March to July range, which is a very important support level. If that were to happen, there's still a little support down here at 61. Those tops there at about 59, which we've talked about on the channel, and reasons why we would not want to see the price hang out down at these levels for too long. And finally, 56 through to 53.5. So basically that would be the final support zone there, 53.5 to 56. Ideally, nothing under that level for this sustained move to the upside. Ideally, nothing below 59 either, but it could test it. And in the most healthiest sense of the correction, 61 through to 63.5. That would be the worst case scenario for the quicker consolidation and move to higher prices. Bitcoin has been under the March top now for 134 days. So price support above 63,500 is basically the best of the best. Price consolidating above 69,000 is the goal here for Bitcoin. 134 days, as I said, that was part of the 3-day down signal that we looked at back in March. That has helped us identify that this was going to be a pretty tricky period for Bitcoin and cryptocurrencies. Now, this is something that we go into great detail with members. So it's over at TIA Premium. You can find a link to this in the video description. The sale is on for today only. This is the last time for that sale. So if you want to get on board, definitely go and check it out in the link in the top of the video description. All right, that leads us over to Ethereum and Solana. Plus, I have something for you guys with XRP, but don't worry, even if you don't hold XRP, I think this is a fantastic analogy to understand your altcoins and how they can pump and dump, and in some cases go absolutely nowhere, like in the case of XRP. But let's just first start with ETH and Sol. Over the last 24 hours, Ethereum's had a pretty significant dump here. You've got about 4, nearly 5% from the open to the close, and then the entire day itself going from 33 down to just under 31, 7.5%. Ideally, closes above 3,200 are the key now. And without that, well, then ETH looks a little bit weaker here. You've got the lower highs forming. The base here is still at 28, so it hasn't broken down yet. Right now, it's in the weaker side of that 50%. So that you can see right through here, 3,400, top to bottom. This is the weaker half. And even in this recent move up, it's now, at least for this recent close, it's in that weaker half as well. So it's starting to put itself in a much weaker position than something like Solana. And you can definitely see it here on the ETH versus Solana chart as well. Basically, ETH has been going down. And if ETH goes down, that means Solana is getting stronger. If this chart is going up, then ETH is getting stronger versus Solana. Both could be going up in USD value. But if this chart is going up, then ETH is making bigger gains than Solana. If this chart is going down, both could still be going up against their USD value, but Solana is going to be making bigger gains than Ethereum. That leads us over to Solana. And although Solana also dropped off 3.5% yesterday, that low came in above the 50% of $163. That 50% is the correction range. So pretty much the top that it's put in for this cycle, $210 down to the low here at 117, slice it through the middle, it's in the stronger half. So you can start to see how strength and weakness play out using this specific GAN 50% tool. This is still holding up relatively strong. Those lows are in. The price is still above 50%. How does it look against Solana and Bitcoin as well? Well, it's got a couple of days left here, a few more days until the week close, the weekly close. The 50% level is at 25754. So a close above that would be one of the highest closes it has done in this entire bull market thus far. Last week's close was pretty damn good, above all those 50%, and it was probably like the 5th highest close in this entire bull market. So ideally, anything above roughly 2450 would be the key level here for Solana versus BTC to continue with that strength in this bull market as one of those stronger altcoins. Now, this whole run up is getting a little bit drawn out. I've got the previous move here from 2020 before basically everything took off, and things were looking relatively dire all the way into that low. Solana versus Bitcoin went down 90%. That was 16 weeks of basically just straight down into that low. But then out of nowhere, it started to pick up. Volume increase as well. That's what this is down here. Lots of green weeks, higher highs, higher lows. And by the time it got to another peak, that was 25 weeks from that previous peak. Now, until it broke out, that took another 5 weeks from that point. So that was 25 weeks from top to top in this move against Bitcoin value. And then it took another 5 weeks. So 30 weeks in total from top until it broke out into a new all-time high against BTC, while Bitcoin was also going up. This was March 2021. So I'm not losing hope in the markets. I'm looking at time frames here, and maybe if you are losing hope, just check out these time frames. If things start to get drawn out past this sort of 25, maybe even 30 weeks, 30 weeks would take us into October of this year. So basically Q4. There it is. That's a number. That's a time frame that we've been looking at. If things start to get drawn out past that and you're not seeing any sort of base, at least base forming, or maybe in the best case, breaking to new all-time highs, that might be a sign that the coin is not going to do too well in this next stage, should there be a next stage. So I'm just looking at these timeframes as they line up similarly to last cycle. Speaking of timing and how these markets move up and then move down, I've got a fantastic analogy for you here, and XRP does a great example of demonstrating this. So if you are into exercising, maybe you are, maybe you're not, but you would understand that you can have a max effort push and then you need time to recover. So if you're going to use these, the max effort push and then recovery analogy, think of it like this. The numbers on top here, use them as minutes, and the numbers on the bottom, use them as minutes as well. So basically it's all minutes. So what you're looking at is a max effort push to the upside and then time to recover. And in the case of XRP, so we're looking at here, look at this. You got 4 minutes to the upside, 1 minute down, 2 minutes to the upside. So you're putting this max effort and 1 minute down. So what I'm using this for is to identify what this market or how this market works, and if there is any more time left in the move. A lot of people hang on to hopes and dreams that their crypto is going to move and continue to move forever. You can't move forever. That goes for everything. A market can't move forever. Eventually, it needs to have time to rest and recover, and then start its next move. And that can be on smaller timeframes and larger timeframes. So you can look at it in terms of one whole session itself. So maybe we're looking at the session from the low to the peak, and that's it. There's the whole low to the peak. Low to peak there. And then basically you've got a bigger recovery time, top to bottom, wherever that might be. Have to have a look there, probably somewhere around here. So the absolute low, and that would be another major recovery time. So you can see here, 57, call it 57 minutes to the upside, and then to the downside, how long did it need to recover? You can see 61. So basically it did an hour's work and took an hour's rest. And so you can get to these points here and realize, well, this thing is probably not going to push that much further. Maybe I should take some friggin' profits. That is how I like to use the time frames, because as much as we can hope and dream that the coin's never going to come down, Remember, the markets are made up of people. Eventually, people get exhausted. They don't have any more money left. They just hope that it's going to keep going up, and it doesn't. So in terms of this analogy, I like to use it because I can see, well, what is the longest stint that it could do in a max effort before it needs to recover? When you start to see the numbers here, this is just all pure data from the chart. I'm not making anything up. 4, 2, 4, 5, and this is on a weekly chart, so essentially in weeks, but just as an analogy, I like to use it in minutes. Okay, can only do 4 up, had to have a rest 1 week. It could do 2 up, had to have a rest 1. 4, 3. And I'm using this because this is one of the major cycle low points. You can see that is the major cycle low point, and then the market went up again from that in a bigger time frame. From that peak, then it came down for a long time. Then it went up for a long time from that low. And guess what? It was roughly about another 50 to 60 bars, which as I'm using in the analogy, we're calling it an hour's workout. Then it had to rest. So it came down into this bottom here at 51. So maybe it was a shorter rest before it goes on its next 50 to 60 minute workout, which as we know is in weeks. So 50 would take it out to about June 2025, and 60 would take it out to about September, maybe in October of 2025. So Q3 to Q4, maybe XRP doesn't break down from 39 cents. Now that might sound amazing if you're holding a bag load of XRP. Great, this thing could go up for another 50 odd weeks. One thing to note, or two things to note, look at the timeframes to the upside. It can only do about 2 to 3, sometimes 5, sometimes very, very rarely 6 weeks to the upside. So far, it's done 1, 2, and it's in its 3rd week. That would probably tell us that we're either halfway through the move to the upside, about to get rejected at 50%, or it could do 6 weeks, with being one of the longest it's ever done. And if you've never worked out for 6 minutes straight, well, it's probably unlikely that you'd do it 2 times in a row, and then you'd come on some sort of recovery mission as well. Now, the other thing to note is maybe you're doing all this work in your workout, but you're eating like a piece of shit. And XRP eats like a piece of shit. It is a fat flog that basically works out and then eats all of the garbage and comes all the way back to the same point. So it's a heavy, fat, overweight piece of crap, and it works out. Maybe it eats all right for a little bit, and then it just puts all the weight back on and basically gets nowhere at the end of the day. And that's why I got here XRP going nowhere fast. You can see in terms of the price, it's basically been, in terms of average, the same price for many, many years. So it's like that fat person that is trying to work out, trying to do all the right things, but they're just not eating well. They're not sleeping well, and they keep getting flogged. They keep flogging themselves in the gym to go absolutely nowhere. Think about that analogy if you find yourself in one of these coins. Maybe one day XRP, maybe this is its calling. It's getting, body ready for our summer down here in Australia, and it's just going to take off to $10 or $500, whatever it might be. It's possible, but looking at its past performance, there's plenty of overhead resistance here for it to get quite lazy. Use this analogy on any of your altcoins. I greatly enjoyed it. Let me know in the comment section if you did as well. And at that point, I think I'll sign off from here. Have a fantastic weekend, and I'll either see you in TIA Premium if you just jumped on board with the sale. Otherwise, I'll see you back here over the weekend or next week. Take care and peace out.